Okay, today we are going to talk about one of the most powerful and, let's be honest, kind of mysterious numbers in your entire financial life, your credit score. It's that one number that can either swing doors wide open for you or slam them shut. It affects the car you drive, the house you buy, everything. But here's the thing, it doesn't have to be a mystery. We're going to pull back the curtain and break it all down.
I mean, it sounds a little bit like a movie plot, right? But in a lot of ways, it's actually true. This one little three-digit number, it follows you everywhere. It whispers in the ear of lenders, telling them what kind of interest rates you deserve, what opportunities you should get. But the best part? You have way more control over it than you probably think. And that's exactly what we're going to get into right now, how you can take the wheel.
So here's our game plan. It's a straight shot, 5 simple sections. First, we'll figure out what this number even is, your financial fingerprint. Then, we'll decode what actually makes it up. From there, we'll zoom in on the 2 golden rules that are total game changers. After that, we'll get into some seriously smart credit-building hacks, and we'll wrap it all up with the right mindset for the long haul. Simple, right? Let's do it.
All right, section 1. Let's start at the very beginning. The best way to think about your credit score is like a financial fingerprint. It's totally unique to you, and it gives lenders a quick snapshot of how reliable you've been with money you've borrowed in the past.
So what is it, really? Well, it's basically a grade for your financial report card. The scale runs from 300, which is not great, all the way up to a perfect 850. The higher your score, the more lenders see you as a safe bet, a low risk. And that means you get the good stuff: better loans, lower interest rates, you name it. A low score, on the other hand, flags you as a risk, which makes borrowing money way more expensive if you can at all. So the million-dollar question is, how is this thing even calculated?
Okay, time to decode the score. This number isn't just pulled out of thin air. It's actually a recipe made from 5 key ingredients from your financial life. Once you understand these ingredients, you've got the power to start changing the recipe yourself. And boom, here it is. Just look at this breakdown. A whopping 65% of your entire score comes from just 2 things. 2! First, your payment history. That's the biggest slice of the pie at 35%. It's all about whether you pay your bills on time. And right behind it, at 30%, is something called credit utilization. That's just a fancy way of saying how much of your available credit you're actually using. The other pieces matter, sure, but those first 2, they're the absolute titans. They're the whole ballgame. So, since those 2 factors make up almost 2/3 of your score, that's exactly where we're going to focus. Forget everything else for a second. If you can just master these 2, let's call them the 2 golden rules, you are already so far ahead of the game.
And if you need any motivation, get this. Just one single missed payment can potentially tank your score by as much as 100 points. That's not a typo. One little mistake can set you back for months, even years. It really shows you how much consistency is king here.
So this is it. This is golden rule number 1. I can't say it enough. Pay every single bill on time. And I'm not just talking about your credit cards. I mean your car payment, your student loans, your rent, your phone bill. If it's a bill, it counts. The easiest way to do this, put everything on autopay. Set a million reminders on your phone. Do whatever it takes. This is the bedrock. Everything else is built right on top of this habit.
Okay, golden rule number 2 is all about that utilization thing we mentioned. Let me break it down. Imagine your total credit card limit is, say, $10,000. If you have a balance of $8,000, your utilization is 80%. To a lender, that looks like you're stretched thin, maybe a little desperate. That's high risk. The sweet spot, the goal, is to keep your balances below 30% of your limit. So on that $10,000 limit, you'd want to owe less than $3,000. And honestly, if you can keep it under 10%, you're in the gold zone. It shows you have credit, but you don't need it.
All right, so you've mastered the golden rules. You're paying on time, you're keeping your balances low. Now, let's get into the fun stuff, the hacks. These are some actionable strategies you can use to give your score an extra push and speed things up a bit.
Let's start with a few really solid habits. First up, don't close your old credit cards, even if you don't use them. As long as there's no annual fee, keeping that account open makes your credit history longer, which is a good thing. Next, try to have a healthy mix of credit, maybe a credit card and an installment loan like a car payment. It shows you can handle different kinds of debt. Oh, and here's a pro tip. Pay your credit card bill before the statement date, not just the due date. Why? Because that's when most banks report your balance to the bureaus. A lower reported balance means lower utilization. It's a great little trick. And of course, try not to carry debt month to month. You'll save a ton on interest.
Okay, let's clear something up that trips a lot of people up: the difference between a hard and a soft inquiry.
A hard inquiry is when you officially apply for new credit. A mortgage, a car loan, a new card. It can knock a few points off your score temporarily, so you want to be strategic and not apply for a bunch of stuff all at once. But a soft inquiry, that's when you check your own score, or when a company sends you one of those pre-approval offers. And here's the key. Soft inquiries have zero, I repeat, zero impact on your score. So please check your own credit score. Check it every month. It's smart and it's completely safe.
You know, sometimes your score is suffering because of a mistake that isn't even your fault. It happens. That's why you've got to check your credit report. You're legally entitled to a free one from each of the big 3 bureaus every year. The process to fix a mistake is actually pretty simple. Step 1, get your reports. Step 2, read them like a hawk. Look for anything that doesn't seem right. If you find something, you file a dispute online, right on the bureau's website. They are required by law to investigate it within 30 days. Fixing just one error can sometimes give your score a massive, immediate boost.
Now, what if you're just starting out, or maybe you're rebuilding after some past mistakes? These tools are absolutely fantastic. A secured card is basically a credit card with training wheels. You give the bank a deposit, say $300, and that becomes your credit limit. You use it like a normal card, and after 6 months or a year of on-time payments, they'll often upgrade you to a regular card and give you your deposit back. A credit builder loan is also genius. It's like a loan in reverse. You make small payments, they put it in a savings account for you, and at the end, you get all your money back. And you've built a great payment history. Finally, if you have a trusted family member with great credit, ask them to add you as an authorized user on their card. You don't even have to use the card, but their long history and low utilization can give your score a nice lift.
Okay, we've covered the what, the why, and the how. But the last piece of this whole puzzle, and maybe the most important, is your mindset. Improving your credit score is not a get-rich-quick scheme. It's about building good, solid, sustainable habits for the long run. It's all about patience, watching your progress, and ultimately, taking back your financial power.
You have to remember, this is a marathon, not a sprint. If you really stick to these good habits, you'll probably start to see some positive movement in about 3 to 6 months. Give it a solid year of consistency and you can see some really significant jumps in your score. And after 2 years or more, well, that's when you've built a long positive history that lenders absolutely love to see. The trick is just not to get discouraged if your score doesn't shoot up 100 points overnight. It won't. Just stay the course.
So what's the right way to watch this? My advice is to track your progress, but please do not obsess. Checking your score once a month is perfect. It lets you see that you're heading in the right direction, and it helps you catch any weird stuff like fraud or new errors really early. But checking it every single day, that's just going to give you anxiety. Trust the process, focus on the habits, and the score will follow. And really, that's the big takeaway here. This number isn't a measure of how much money you have in the bank. It's a measure of your reliability. It's a reflection of your promises. Every time you pay a bill on time, every time you keep a balance low, you're making a small deposit into your reputation for being financially responsible. And over time, those deposits build something incredibly powerful, opening up doors to whatever you want to achieve. It's not about being rich, it's about being responsible. Don't forget to subscribe, and thanks for watching.